Shriram Finance then, which reported its Q4 numbers. The net interest income beats the street estimates, while PPOP and profit was largely in line. Let's go across to Snehi to understand how the numbers panning out versus the street estimates. Take it away, Snehi.
Well, yes. So let's take a look at what Shriram Finance's Q4 numbers look like. Largely coming in line with street estimates. Let's break them down. Then net interest income has come in at 5,336 crores on a consolidated basis, which is up 20% on a year-on-year basis. Now, this is largely in line with street estimates, but slightly above what we were estimating here at ET now. Operating profit has come in at 3,906 crore rupees, which is up almost 10% on a year-on-year basis as well, in line with what the street was expecting. Net profit also very sharp uptick coming in over here, 1,946 crores versus 1,300 odd crores last year. So that's an uptick of 48.7, in line with the 49% uptick that we were expecting at ET now. NIMs have remained largely stable at 9.02% versus 8.99% sequentially. Return on assets and return on equity both have seen some good moves coming in over there as well. ROE has come in at 16.3 versus 12.2% on a year-on-year basis. AUM is also up by 21% on a year-on-year basis. Asset quality largely stable. Gross stage 3 net assets has come at 5.4% versus 5.6% sequentially. Net stage 3 assets also rather stable. And board has approved a dividend of 15 rupees per share as well. And shifting focus to the housing finance business, then good numbers coming in there as well. AUM has seen a steady uptick. NII has risen by 44% and PAT is up 67% on a year-on-year basis. But when you take a look at what the management had to say in their con call, they have said that the product mix will focus on high-yielding assets going ahead. Expect NIMs to be largely stable at that 9% mark going ahead as well. They're also expecting slightly slower growth in Q1 of FY25 on the back of a slowdown in capex on the back of the elections going on. And lastly, they've said that they will be focusing on growing the bottom line faster than the top line. So, well, these are the key takeaways from the management commentary coming in as well. But overall, largely in line set of numbers coming in for Shriram Finance for Q4.
Yeah, our intent is to maintain 9%, and the product mix definitely will continue to have a focus on high-yielding assets. One is this year, financial year, the first 2 months, election will slow down demand, credit demand to some extent, because see, this is a capex-driven growth, our Indian economy. And when the government machinery are involved in election duties, there's likely to be some slowdown in the capex activity of the government, infrastructure activity. So we therefore expect little slower growth in the first quarter. That's first. And the second is we would like to be as granular as possible, not focus on top line growth. Because if we go for big ticket loan or new vehicle or equipment loan or big ticket SME loan, we can always grow faster. We will be focusing more on high yielding product, more granular. So our aim is to grow the bottom line larger than the top line.
If you like this video, then like, share and subscribe to ET Now.